Welcome to the Transparent FX Academy. This will be a very important tutorial, so make sure that you stick throughout the end of the video without skipping any parts. And without further ado, let's jump straight onto the charts. In this video, I will break down some of my favorite trades from my strategies. Now, as usual, I'm one of the only traders that has a fully verified third-party track record on my FX book, so none of these trades can be made up because they're all there in my FX book. So I will be breaking down what I was looking at when the trades were executed and how they were executed, so with which strategy. So let's get right into it and learn as much as possible from these charts and these setups. Starting here, the first trade is on GBPUSD. It is a short trade, so let's go and see exactly what was happening on the charts when the trades were executed. Here in the monthly time frame, what we had was a market with a very strong impulse to the upside, and at this point the market was overextended to the upside and in need of a correction, because remember that no market can just continue to go up in a straight line. Every uptrend needs a series of impulses and corrections along the way. And after an impulse, what you expect is a correction, especially in this case, a correction would be a move back down to retest also this previous monthly resistance turned support, because as we know in the market, previous resistance, once it is broken to the upside, is turned support, and you expect the market to go and retrace to this previous resistance turned support area. So here in the monthly, the situation was quite clear. The market was overextended and in need of a push lower. Now, if we go and see what was going on when we look at the commitment of traders, so what institutions were doing at the time on GBPUSD, the first thing that we have to keep in mind is that if we're looking in the data for the GBP, we are actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see here is that net positions just got decreased with the previous reports quite massively. We had a situation in which we were going from the top here at 51.6k net positions with institutions holding 111,000 longs compared to only 59,000 shorts, all the way down to first 42k, 34k, 31k, then slight increase, then again down to 29k. Now we are only at 570. So it was clear that institutions were shifting their positioning from the bullish side that they had right here back down to the bearish side by increasing their shorts and decreasing their longs. Moving down on the weekly time frame, what did we have? Here in the weekly, what we had was a market which was starting to break from a weekly bullish trend to a weekly bearish trend. Because in fact, previously, what we had was completely the opposite. So a shift from a weekly bearish market to a bullish market. So we went from the creation of weekly lower lows and lower highs to then the creation of weekly higher highs and higher lows. And now what we were starting to see is a test of the previous resistance turned support, so the previous weekly high, and the market was starting to break below that zone. So essentially breaking the trend and failing to respect the previous high, which is also the previous resistance turned support, which usually is an early sign that a trend is starting to finish and the market is again starting to shift from a bullish, in this case, to a bearish market. Dropping down the daily time frame, what did we have? Well, here in the daily, the situation was quite clear. What we had was a daily break of structure. In fact, what we can notice here is that this level here, this was the previous level of daily resistance from which these two moves to the downside were created, which the market had then broken to the upside. So essentially what we had was a break above previous daily resistance, which at that point was turned support. And what happened here is that the market just broke and closed from a daily closing perspective below the previous support at this point turned resistance. And as the market was already testing this zone, so essentially retesting the previous support and resistance, there's a good probability on the retest of a previous support and resistance to see a rejection lower below the zone. Dropping down here on the 1 hour time frame, what do we have? Well, here on the 1 hour, we had a situation which was quite interesting. The market started with a huge impulse to the downside, and then we had this strong correction which started aggressively but then slowly started to lose its bullish momentum. What this means is that we're having a situation in which, first of all, sellers were clearly in control. Then buyers stepped back in, but slowly they were getting once again exhausted. And this is a quite interesting pattern, and actually it is a pattern which happens in the market quite often, in which you see a strong impulse to the downside, then buyers try to get back the control of the market, but then every time the market is pushing lower, they essentially fail in controlling the market, and every time the market creates a higher high, new sellers step in, and at some point sellers take the control and the market pushes to the downside once more. And that is exactly the situation which we had right here. So in a situation like this, the push to the downside becomes a probable scenario. Let's drop down on the 15 minutes time frame and see what we had. Well, from a 15 minutes perspective, in this case, the execution here of this trade was based on the London breakout strategy, which is a strategy which you can find directly on my website. There is a full presentation of the strategy and complete historical backtest of it on more than 10 years of data with all the statistics. And in this case, it was a perfect execution. The market executed and immediately pushed to the downside for a quite nice 2.3 risk to reward. So quite nicely executed. Obviously, I cannot share all the rules of the strategy, but if you want to see the full presentation, you do find it on the website of this strategy. Another nice one, as we will now see, was BTCUSD with a 1-to-4 risk to reward using my strategy, the BTC Pulse. Now, let's see what we had here from a monthly standpoint and then continue to go down on all the time frames as we have done previously, all the important time frames. Now, starting here on the monthly, what we can see is that we had a market which clearly had a very strong impulse to the upside, followed by this correction, and the correction went all the way down and retested the previous monthly resistance turned support, because as we know, from here, all this previous rejection to the downside was created, the market then broke above that zone, and again, previous resistance once broken to the upside is turned support. The market retested it as previous resistance turned support and was rejecting it to the upside. And what you would expect in this case is the continuation of the uptrend and the market to create new monthly higher highs. What you can also see is that as we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and we can see how the market had retraced exactly to the zone in between the 50% and 0.618 Fibonacci retracements, which is exactly what you expect in a situation like this, because you expect the market to correct to the area that has the Fibonacci levels in confluence with previous structure. In this case, the previous structure was this previous monthly high, and the market went, in fact, all the way down here, retested the previous resistance turned support in confluence with the Fibonacci levels, and that is where we started to see strong institutional buying pushing the price higher. So here in the monthly, everything was quite clear. Let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, the situation was very clear as well. We had a strong impulse to the upside, correction, and the market was starting the continuation to the upside again, completing in this case this weekly impulse correction and impulse pattern to the upside. Is also important to keep in mind how the previous high was exactly this zone. Once this weekly candle here closed, this green one here, at that point, the break of structure was confirmed because previous weekly resistance, once it is broken to the upside, is turned support. And also here, what you would expect is a retest and rejection to the upside, which again is exactly what the market was showing. Let's drop down on the daily time frame and see what we had. Here in the daily time frame, the situation was very clear as well. What we can see is that we had a market which for quite few days was stuck in this range. And this range was also having this counter trend line, which was holding the market from the upside. And we had this support here at the bottom, holding the market from below. So every time that the market was testing this support, it was respecting it as support. And every time the market was going and testing this counter trend line, it was being rejected to the downside. However, what then happened was with this candle and this impulse to the upside, the market broke out from this counter trend line. And what you expect after a breakout from a counter trend line is a retest of the counter trend line itself, and then to see a strong impulse and breakout to the upside. And in fact, that is exactly what the market was doing. The market had broken the counter trend line, retested it, and was in the process of rejecting it to the upside. So also here on the daily time frame, everything was quite bullish. So let's go down on the intraday time frames and see what we had and what the trade was looking like. Dropping down here on the 15 minutes time frame, we had a very interesting situation, which is exactly what my BTC Pulse strategy, which also this one you find a full presentation of it on my website, looks to trade. We had a situation in which we had a massive impulse to the upside, and then we had a very long consolidation period. Now, usually in the market, when you see a strong impulse to the upside, the longer the consolidation period is, the stronger the breakout to the upside. And patterns like this usually give the possibility to look at quite high risk to reward setups. In this case, we were looking at a 1-to-4 risk to reward. And the market, it actually followed exactly what you would expect in a situation like this. We had the huge breakout to the upside, and the market went the full length and actually even exceeded the TP of the setup, going for a 1-to-4 full risk to reward setup. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the tutorial, make sure that you click on the like button. Also, let me know in the comments below any new topics that you would like me to cover in new tutorials. Subscribe to the channel so you never miss updates, and I will see you in my next video.